Welcome to Al Stock Tips. In this video, I'm going to be breaking down key economic indicators that will directly affect what is going to happen in the stock market in the next 3 to 5 months. I have 5 years of experience, and I'm going to literally show you the consumer price index, the jobs report, the bond market, and other key economic indicators that will essentially make sense to why the NASDAQ hit a fresh record high, why gold, silver, and Bitcoin prices are increasing, and what that means for the ultimate meme stocks that we all love and adore, such as Palantir, Clover Health. A lot of these stocks are going to be increasing, and I'm going to be sharing with you why they're going to be increasing, so you are an educated investor right after these messages. Right now, I'm going to be showing you this Wall Street Journal article, and it pretty much talks about the 235,000 jobs that were added on Friday. Unfortunately, this was disappointing. We were actually expecting 720,000 jobs. See, that's a big decrease. So what I did was, just to make things a little easier, I went on Excel and I pretty much graphed the last 4 months of the jobs report. And as you can see, we're actually going ahead and increasing dramatically. Again, the y-axis is jobs added, and this is months. We almost hit pretty much around 900,000. We're actually expecting about 3/4 of a million, but now we went ahead and gotten around 1/4 of a million. This is actually really bad for the economy, but for some reason it is good for the stock market, and I'm going to explain to you what that reason is. Okay. Now, unfortunately, there's byproducts to this, right? The byproduct is we have the U.S. unemployment rate by race. Blacks are unfortunately leading the way for unemployment rate. In fact, this is a big healthcare disparity, and the gaps between the haves and have-nots of our society is increasing. We start to see Black people with an associate's degree are least likely to get employed when compared to a white person without any degree at all, without even a high school degree. This is definitely disturbing. And the reason why I'm talking about it is Federal Chairman Jerome Powell said that he wants the economy to rise up for everyone and not be stagnated to and only rise up for certain populations, aka a K-shaped recovery. Right now, we're essentially in a K-shaped recovery where the rich are getting richer, the ones that are investing, and the poor, especially if you look at by race, are getting poorer. And this is not the way an economy should function. An economy should function in a V-shape, right? So taking all this data, why does this matter for the stock market? Well, ultimately, a soft jobs report puts less pressure on the Federal Reserve to begin its planned reduction of support for the markets. That can be good news for investors, at least in the short term, right? So why is it good news? Well, let me explain to you. What happens when we go ahead and delay the tapering of assets? For people that don't understand what tapering is, when the Federal Reserve stops printing money for the economy. Since March 2020, the Federal Reserve has been printing $120 billion a month to sustain the economy. The problem is, when you print that much money, you are at risk of increasing to the dollar amount. Is the dollar amount, the value of it goes down. So what are people going to do? They're going to invest in NASDAQ, gold, silver, Bitcoin, Ethereum, and high growth stocks because it's low risk. Now, translating this back onto the iPad, you saw that the S&P 500 dropped, the Dow dropped, but most importantly, the NASDAQ composite closed at a fresh record. In fact, more than just the NASDAQ. As you can see here, let me just kind of show you proof in the pudding here. On the one-day chart, as soon as the jobs report came online, we saw a huge rise in the NASDAQ. In fact, it closed at a fresh record. Gold, this is the one-day chart. As soon as the jobs report came back online, we saw gold prices increase. Same thing with silver. And if you look at the 5-day chart on Bitcoin, you start seeing here on Friday, it went ahead. It increased. Mine's Saturday here, but you can see it increased because of the jobs report. Let me just reiterate. Because the jobs report came back, it was very terrible. That means the feds have no choice but to delay their tapering of assets, which means that they're going to continue to print more money. However, the continuation of printing more money will lead to inflation, which means that investors are going to have to park their money somewhere else, such as the NASDAQ, which is why it finished at a record high, buy more gold, which is why Palantir bought some gold, silver, and Bitcoin, which is why Bitcoin has been increasing rapidly, especially where it's been increasing in this weekend as well. Now, we also didn't talk about the elephant in the room, which is why the jobs report, I think, started decreasing, is because of this thing called the Delta variant. Delta variant has unfortunately put a bottleneck on the economy. It's weighing on consumer spending. And we're going to make another video about what economic indicators track consumer spending and what that leads to the stock market. It's all related and it's all connected. But I want to make this very fast. So back onto the iPad, we're starting to see that COVID cases have been increasing. This is September 3rd, and you're starting to see it. We don't know if it's going to plateau or keep going up. Again, we haven't even hit winter months. And just to give you some perspective, these are when lockdown started, right? And this was in kind of January, right? And if you remember stock market in January, it was, Palantir, Jumia, all those stocks were at all-time highs, right? And I think that's where we're headed right now, especially with what's happening with the bond market, which I'll explain to you. Moving forward now to the statistics for deaths of COVID, we're starting to see that we're approaching a third hump. We don't know where this is going to stop. It may even surpass. We don't even know. We may even get a strain that unfortunately kills vaccinated patients because of the mu variant that can do something called immune escape. These are all scary things, and they're all starting to weigh on the economy. In fact, the way consumers are spending. The decrease of job growth is likely to spoil the case for the Federal Reserve to start reversing their easy money policies related to the pandemic at its September policy meeting. So they're going to be meeting in September 21 and 22nd. I'm going to have the dates written down here on the iPad, and you can take a screenshot of that. And I think the next meeting will be in December, and they're going to delay it until then. But before that, there's another indicator called the Consumer Price Index, which we'll talk about, which measures inflation. This is a big deal because if they delay their tapering, like I said, it's going to have a fusion frenzy, because we're going to have September, October, November, December. And what a fusion frenzy in my books means is the NASDAQ is going to hit a fresh record high. We may even see the NASDAQ go ahead and cross the $16,000 mark. We might even see Bitcoin cross $80,000. In fact, even going into $100,000. If you want to be an investor, you have to understand the bond market. So by understanding the bond market, you have to look into history. Back in 2008, when the mortgage crisis happened, government stepped in, continued buying assets. Same thing happened. COVID crash, 2020, they did the same thing. So theoretically, the bond market prices of the bond market is directly proportional to the Treasury yield. So if the bond prices go up, the Treasury yield goes down. And if you don't believe me, go to Yahoo Finance or whatever chart you want to look at, pick up the NASDAQ and look at March 2021 and pick up the Treasury yields. You'll see that Treasury yields started going up and the NASDAQ started going down, which is why a lot of our stocks dropped half off. So I saw that and I quickly pulled out and I said, I'm going to wait until the bond market stabilizes and I'm going to go ahead and reinvest, which is what we did back in March and Mayish. In any case, let's go into the specifics. So why did the Treasury yields end up starting to go down even after inflation was going rampant? Well, we have to go ahead and look into the history, because you have to understand all these billionaires and millionaires, they're looking at this data and this is what they're doing. This is exactly what's going through their mind. And I'm trying to show you so you have an educated strategy. So if the stocks do go down, they're either going down by market manipulation or unfortunately retail traders don't know this information are selling and you can scoop them up at a good price. So furthermore, if you have 2013, you start seeing that the Treasury yields, and this was kind of post the financial crisis, we were having Treasury yields at 1.6%. As soon as the Feds decided to announce that they were going to be tapering, it literally doubled. The Treasury yields doubled to 3%. Now, what does that mean? Well, they assumed that the bond prices they're going to stop buying them. So bond prices had to go down. So what happened to the yield, the Treasury yield? Well, the Treasury yield started to go up. But guess what? When the taper started to begin, the Treasury yields went down and the bond prices went up. So in any case, that's exactly why the bond prices have been going down in June, July, August, regardless of all the CPI data that has pointed out, because they believe in the Feds that this is going to be transitory. And I'm going to be explaining to you what that means. If you were to ask me, well, Albert, why did the Treasury yields actually go up on Friday? Well, because the economy is confused. We thought we're going on a recovery. Joe Biden, President Joe Biden talked about how we're going to celebrate 4th of July and things are going to go back to normal. And we've pretty much declared that we've, ended the virus. Unfortunately, that's through the graphs and through the science, following the science, that's not the case. So now until September 21st to 22nd, when the Feds meet, I think the bond market's going to be very choppy. However, everything I explained to you should show you that the market's going to be extremely bullish on growth sector plays, Palantir, Clov, and even Jumia, essentially high growth stocks, more specifically Palantir and Clov. Furthermore here, this is the consumer price index. So going back into the iPad here, I'm only going to point out one little thing here. This is the used cars and trucks. If you look at from July 20 to July 2021, literally 1 year, you start seeing that used car prices increased by 41%, right? That's a huge deal. However, just like the Feds was saying, relax, calm down, this is transitory. We're going to look at the seasonal adjusted percent change from April to May, May to June, and June to July. And these are just kind of 1 month increments. You start seeing that it went from 7.3 to 10.5. Everyone is saying, curse the Feds. They're wrong. They're going to screw up the whole economy. But then all of a sudden, they became Team Jerome Powell again when the used car prices went down, just like lumber prices going down. And the CPI data, which is supposed to be released now in September 14 at 8:30 Eastern Time, is going to basically illuminate and tell us what the Feds are going to be doing on September 21st to September 22nd of 2021. Again, take a screenshot of this. This is a really important date. Okay, so what happens if the CPI data comes, which measures inflation, and it says things went down, just like this particular event here? Well, it falls in line with the Feds. That means the Feds are going to taper their asset purchases, and they're most likely going to come back in December to discuss when they should taper. That's going to be extremely bullish, which means that we may even have the NASDAQ hitting all-time highs and Palantir hitting all-time highs and all the growth stocks hitting all-time highs all the way up until the end of the year, right? Which is really good, which is exactly what happened last year. If the CPI data comes back and then it comes back saying inflation has increased, well, then at that point, we need to look at other things like how bad is COVID? And we haven't even entered the winter months. Other key economic indicators that I like to discuss right now is looking at travel. If you look at business, leisure, family, and non-family travel, you start to see that they all have been going down, especially hotel volumes, flight and hotel volumes. So what does that tell you? That means people are not spending. Consumer spending is decreasing, which means that the velocity of money is going to go down, which means that perhaps inflation might actually go down. And the CPI data that we're going to find out about, which is on September 14, might show a decrease. All right. Last but not least, I want to leave you with Cathie Wood's statement here. There's a lot going on here. Okay. She says the equity market, which is another word for stock market, I'm going to break down her statement, is likely to reward disruptive innovation strategies such as PLTR, Clover Health, and possibly even Jumia, because then it'll be a risk on market, right? Once again, when the headlines of inflation breaks. Well, how does inflation break? Well, inflation breaks by the CPI data decreasing, which is going to again be on September 14th, 8:30 a.m. Eastern Standard Time. Or fears of a recession increase, such as the Delta variant increasing, other variants that can bypass the immune system through immune escape, such as the making and rendering the vaccinations not useful. If the bond market is correct, one or both will be obvious in the next 3 to 6 months, which is why I'm making this video. If you like what you have seen, please smash that like button, hit the subscribe. I hope I earned it. I spent a lot of time and money into creating this YouTube studio for the benefit of my YouTube community. I have 4 degrees going on my 5th degree, becoming a physician, more specifically, becoming an academic neurosurgeon. I started off homeless when I was 15, and I want to create the family I never had. I see a lot of these YouTubers have this community, and I want that. I want all of us to grow together, and please join me on this amazing journey where we all become financially independent. It is my honor and privilege to make these videos, and I hope that you see this hard work. Until next time, thank you.